Every month I receive money from companies in the form of dividends. Some months it's a lot and some months not so much, but having that income means that my rent is paid, my bills are paid, and I have some money left over to do what I like. And while I do receive other forms of income, such as AdSense from this YouTube channel, I have some book royalties, the majority of my income comes from monthly dividends. So how did I get into this position, and how can you do the same? Let's start with a history lesson on how I got started, because I get asked this a lot. I started investing back in my early 20s and I was working full time, and every time I would save up $1,000 or $2,000, I would put it into the stock market. In the beginning, I was learning as I went, but over time, I kind of got a feel for it, and I really liked the idea of being a shareholder in a company. It just felt kind of important. In fact, one of my first stocks that I owned was in the Organise company. They're a brand in Australia that has mainly handbags, but other fashion accessories as well. I remember one time I was at the shopping mall and I sat outside an Organise store and I was just watching people go in and out buying things, and while I wasn't interested in buying anything myself, I just knew that those people making those purchases were giving money to the company and I was going to receive a piece of the profits because I was a shareholder. So I did this for about 5 years of working and putting money into the market and learning as I went, and actually at the end of the 5 years, with time and the amount of money I was putting in, it grew to quite a really good amount. It was around this time, or maybe a year or so later, that I decided that I wanted to have a family. So I put investing onto the back burner. I still had stocks, but I wasn't actively investing during the time that I was raising a family. So for the next, say, 10 years, I was mainly just letting it grow in the background and just looking at it occasionally, but not really actively investing during that time. Then a few years ago, my situation changed again and I had a decision to make. I had to move. I moved interstate and I had to make a decision on what to do next. I could buy a house and go back into the workforce and get a full-time job again, or I could go full force into the stock market. So that's what I did. I already had a portfolio, but I also had some extra money from moving and all of those costs, and I put that into the stock market as well. And this is where I am now. But I did change my portfolio strategy. I was no longer interested in growth per se. I was interested in the monthly dividends I was going to get. So I was interested in having an income from the stock market. So after some shuffling and some rebalancing, here we are. So I did have the advantage of having a portfolio already, but I did manage to restructure it so that I could receive dividends on a monthly basis. I basically wanted to provide sort of a monthly income for myself. So you would build it exactly the same way. You would start small and it would grow over time, because stocks have a tendency to do that. Now, sometimes the market is going to be up, sometimes it's going to be down, sometimes it's going to be significantly up, and sometimes it's going to be significantly down. But over time, it's always going to rise, because it always has. And people who are scared of losing money in the stock market don't really understand how to use those fluctuations to their benefit. For example, when the market is down, that's actually the best time to buy. I have this analogy where, just say you were interested in buying something, let's say an Apple computer. Apple rarely has sales, but let's say that one day they had a 25% off sale. What would you do? Would you panic sell your current computers because the computer industry is crashing, or would you go in and buy a computer at the cheaper price, maybe even two, and sell the second one as a profit? That's pretty much how the stock market works. When it's down, I call it a sale, because you can pick up some really great companies at some really great prices. But if you are investing for the dividend, you don't really care about those market fluctuations anyway, because they very rarely impact the dividend payment. So you're going to get the dividend payment no matter what the stock price is doing. The only reason you would sell in this scenario is if they no longer paid a good dividend or something else was happening in the company, and then that fall you would sell. But there's no reason to really sell a good paying dividend company, even if the stock price has fallen a bit. So how many companies should you hold? Enough that you can have some monthly income. I've got around 13 separate companies, I think. That's because I live in Australia and companies here usually only pay twice a year. They pay their dividends twice a year, whereas in other parts of the world, it's common for them to pay 4 times a year. But here in Australia, they pay twice a year. Some pay 4, but most pay twice a year. So I need enough companies so that I can have at least one company in each and every month that pays a dividend, so I can receive monthly income. I also own exchange traded funds, which is like an index of which holds 100 to 200 companies. So I'm not counting those. I'm only counting the single stocks that I own, which is around 13 to 15 I usually hold at any one time. I've actually made a video on how to find companies to invest in for the dividend income, and I'll link it, I think it's this side, and I'll also link it down in the description. But for a quick refresher, here's what I look for. I look for high market capitalization stocks. That's usually the stocks in the ASX 200 here in Australia. That'd be the equivalent of the S&P 500 in the US, and so on. I also look for a dividend yield of 5% or above, and I also look at dividend stability. I'm typically looking for around 90% or higher for dividend stability. Now, if you have a whole bunch of companies and you're trying to decide between a few, I usually weigh up both the dividend stability and the yield in trying to determine which one I'm going to go with. I do factor stability as important because I want a stable income coming in each and every month, but I also want it growing. So having a little bit of variation if it's growing is a good thing, but having the same income coming in year after year is not a bad thing either, especially if you're adding to the portfolio over time. So if you want to make a list of stocks that fit your criteria, then go right ahead. Just go through however many companies you want to go through. I usually go through and do a search on the ASX 200 and find just those stocks that have dividend yields of over 5%, and then I go through and look at the dividend stability and a few other things. Now, building your monthly income. In a perfect portfolio, you would choose companies specifically just on their dividend yield and their stability, and that was it. But if you're trying to create monthly income, you're going to have to make some trade-offs. You might have to choose a company that pays slightly less simply because it pays in a month that no other companies pay in, and you need income for that month. Generally, companies will pay in the same months every single year. So if they paid in May and September last year, they're very likely to pay in May and September this year as well. So from the list of companies that you found, just write next to them which months they pay out. So March, September, August and December, or whatever months they pay out, just make a list next to them so you can quickly see at a glance when are they likely to pay their dividends. You're quickly going to see that there are some months that nearly all the companies pay in and some months that barely any pay in. I also like to create a grid like January, February, March of the whole year and write out the companies that pay in those months so I can see at a glance easily which companies are paying. So if I'm looking for a company that's specifically to pay in January, say, I can then just look at those companies that pay in January and decide between those. Again, you don't have to set up your dividend portfolio this way. It's just the way I do it because I want the monthly income. Balancing your portfolio. Now you should have a rough idea of which companies you're interested in and which months they're likely to pay out. Now is trying to figure out a good ratio of how much of each company to buy so that your monthly income is going to be roughly equal. Now you're not going to get this right, I don't, and it can be a bit of a shuffling act trying to create a consistent monthly income. It can be a little frustrating to try and do this in Australia because companies don't always pay equally. They don't pay every 6 months. They pay an odd month. So you'll have one company that might pay in March and September, and you'll have a second company that pays in May and September. So now you've got two companies paying in September, but only one in March and one in May. So it is hard to get even, but try and create as consistent as income as you can. But like I said, it's very unlikely that you're going to get it all even exactly. I average around $4,000 a month, but I have some months where I might get double that, and I have some months where I get significantly less than that. My highest months are April and August, whereas my lowest months are January and May. And that's just based on the companies that I own. Now, should you reinvest the dividend? Some companies that you invest in will have a DRIP program, a dividend reinvestment program, and whether you want to participate will entirely depend on your goals. Now, over the long term, you will make more money if you do reinvest the dividend, but that's entirely whether you want the income or you don't want the income. I take the dividend because I want the income, and I'm not interested in growing my portfolio that much more. I'd rather just have the income so I can live day to day, but you know, if you don't need the income, reinvesting is also a good option. Next comes to building up your portfolio so it starts to grow over time. So now you should have a good plan on what to buy and what stocks you're interested in and which months they pay out. Now you just need to decide what order to buy them in. If you've got nothing in your portfolio, I suggest starting with a company that's going to pay out dividends in 2 months' time. That gives you enough time to buy, usually before the ex-dividend date. The ex-dividend date is the date where of which if you buy after that date, you won't get the next dividend, but if you buy before that date, you will get the dividend. So if you buy before the ex-dividend date, which within 2 months is usually you'll be buying before the ex-dividend date, you'll be receiving your first dividend in 2 months. And I like that that's kind of a really fast timeline to get your first dividend. Even if your dividend payout is small, I always find it exciting that the company is paying you a part of its profits, and why not enjoy it? And from there, you can just start building one by one until you've got enough companies that you've got income coming in every single month. You might have more than one company paying in a particular month, or you might only have one or two, depending on how many companies you own. But your goal is to have at least one company paying in every single month, so you're receiving monthly income. And just a reminder that usually when you're starting out, the dividend payments are going to be small in the beginning, but as your portfolio grows and as the dividends increase in value, you'll start to get more and more money each and every year. And hopefully one day you'll be able to live off the income. It did take me 17, actually I think this year is 18 years from when I first made my first trade, and it was the start of my investment journey, to now. So time was a big factor in me getting here, but it also, because I was working full-time in the first 5 years, I was able to grow it then, and then time really did the rest. And then in the last 2 or 3 years ago is when I restructured so I could have monthly dividend income. So that's pretty much how I have built monthly income through dividends, and how you could do the same. I hope you found this video useful, and I'll see you in the next video. Take care. Bye.